Alrighty, traders. Hello, everybody. My name is John Howell, and welcome to a little live review of the markets today. I have just opened up the charts myself to see what's going on with the world today. It is first thing in the morning for me, so I thought I would come on and do another live stream. And that's what I'm doing today's stream. Not really. I'm obviously going to be talking about some stuff, but so what's going on with the world today? What is going on with the world today? Okay, so Bitcoin and Ethereum's getting hit pretty hard today. Man, the cryptos, guys. That crypto market, there's going to be this is just the start of something major coming. I honestly believe that. And the reason why I say that, I've always said this to my elite coaching group that I have. There's just too much fugazi in the crypto market right now. What I mean by that is, like, it just doesn't make sense to me. The crypto market, like, anyone can create a token or a coin. Like, you had the Hawk Tour girl that created a coin as well too, a coin or a token or something like that. You're creating a coin called Daddy. Like, anyone can just do it and pump it and keep buying it, don't sell, like, and not get in trouble. I'm like, this is so the crypto market is definitely one of those markets that I have stayed away from trading wise. I'll trade it, meaning short-term trading. I actually had a good trade on Ethereum last year. Really good trade. Long-term investing, I just don't, it doesn't make sense to me. I'm not sure for you guys as well, but by looking at, again, so last year, I traded Ethereum here. The reason why is because it actually met my trading setup here. We had a nice little L-shaped trading pattern here. For you guys that don't know, I trade basically based a chart and one moving average. And we had it up, and then we had a sideways, and then we had the moving average coming up, and then I traded it right here, wrote it up, got out here, and that was it for me. So I'll trade it. If you guys go to johnsfreegift.com, I'm giving away a free book. It's called an X Factor book, actually. And then also you're going to get access to my trading course, and I'll teach you my trading system for free in that course as well too, if you want to learn my trading system for free. But so this is Ethereum here. And the thing for me is as a buy and holder investor, I know there's a lot of hype around the whole Bitcoin stuff, and just not for me. Not for me. I'll move this over a bit for you guys. Mm-hmm. Yeah, look at that, eh? Yeah, I saw that coming. Aussie dollar rising compared to the US dollar. And this, I'll teach you a little pattern for you guys, obviously watching the replay or watching it live. I'll teach you a pattern that tends to form major bottoms at markets before we get reversals here. Let me show you this here. Typically, what happens in significant bottoming patterns in markets, you can see I've already drawn it on my. I've already been drawing it on my screen here, but I'll bring this over here. So to the left is my weekly chart, and to the right is my daily chart here. And the one thing that I'll take off my 24. I always use 24 on my weekly. Notice my circle here. Now, significant bottoms, what I've found that major bottoming patterns, before we start to get a strong reversal and turnaround, is what you see from here, right? So let me just sync you in layout. So as you can see on this one here, the market was coming down a lot through here, right? And we had a lot of support around this 63.63 level, 0.63, down to 0.62. So we had a lot of support. We had a lot of market coming down here, and we had a lot of support through here. And as you can see, what ends up happening here is you have a major support level. It flushes down, but see how it flushed down, but then it turned right back around really quickly. So 1 week it's coming down, and the next week it's coming right back up again. That typically is a end of trend or a flush down before we start to get the bottoming pattern. And then we start to see the market rising from there. So it's one of those things that I've noticed when we start to get these, nice, good downtrends for a while, and you start to get a bit of support level. If it flushes down and then turns right back around, there's a major probability that that point there, as you can see on this Aussie US dollar pair, that's the bottom. And then we start to see a significant turnaround. So this rise in the Aussie dollar compared to the US dollar is actually not a surprise. I was actually talking to my chiropractor about it, and he was so surprised. Like, you see the Aussie dollar starting to rise. I'm like, yeah, I saw that back last year. So it's just all these different patterns that we can form. The chart is so powerful, meaning like the chart really gives you a good guidance on what's going on. Oh, TMF had a nice little pop today. I know you guys can't see it. Actually, I'll bring this up to here. Actually, can I move my thing? I don't know how can I. Yeah. So just looking across all the markets today, Dow Jones had a nice little pop today. S&P is almost at its all-time new highs. TMF, really nice pop today. Really nice pop in TMF. Wasn't expecting that today. Nice little gap up there. Oils continue to rise. TMF, baby. Remember I said before? One of my views over the next 1 to 2 years is the bonds are going to start to rise. TMF, baby. Let me go to actually, I'll bring this up to here. And then we'll go down to, where's the TLT market? Oh, it's starting to hold, isn't it? If we hold and break this level, we're going to start to rise up to about that 100 level. because then this here would be a major low here. Oh, you guys can't see it. There we go. Actually, I'll do this instead. I'll bring it over here like this. So this point down the bottom here, it's starting to form a major bottom pattern. Or I don't know if it's going to be a major bottom pattern in total, but yeah. So very nice. That means we're getting the drop in the rates. There we go. For you guys have been following me now for the last even couple of months, especially for the last 6 months or so, you know I've been saying rates down, bonds up. With these calls, you don't know how it's going to form. I'm just confident it's going to happen. And it's starting to slowly happen now, isn't it? Look at that 10-year. 10 years actually big gap down on the 10-year. 30 years starting to roll over as well too. So it's starting to slowly form in the way that I've been talking about for the last probably 6 months or so. Where we've got rates down. Again, that's the reason why I'm long TMF right now from an investment point of view and a trade as well too. Peter, my man. David Hunter has a price target of 6,800. Yeah. That may happen. I don't know, like as a let's go have a look at gold here. So yeah, he could be right. And while we're definitely still in this very strong upward trending, so we're not there, we're not over yet. The 2-year rate. Let's go check the 2-year rate. Yeah, the 2-year rate. I'm not sure if you saw my live stream yesterday, Peter. I'll bring my trading view back up again because the 2-year rate. I'm expecting the 2-year rate to get hammered through here. Look at this here. It's holding support. And I'm expecting the 2-year. This is the 2-year looking at now. I'm expecting the 2-year to drop hard. I think that's what you're referring to, Peter. I'm expecting that to happen, by the way, because we're just holding here and we're about to break. And when we do break, we're about to drop. And the Fed will follow the, yeah. But everything's starting to work out the way, or things are slowly moving in the direction that I've been saying, or that I've been seeing. Everything's slowly moving in that direction. Yep, the drop in the rates are starting to happen. I'm loaded with TLT. I wouldn't say I'm loaded. I definitely have a good position size on there, but I'm not loaded. I'm always on the risk management side of things for myself. Both even from an investment and a trading point of view. So definitely not loaded myself. Because there's no guarantees, right? So always want to protect ourselves. I'm just eating breakfast, by the way. Today it is oats, berries, oats, blueberries, peanut butter, and a honey. And I had a protein shake this morning. It's morning for me, if you guys don't know. It's like 6 o'clock in the morning for me right now. Just finished doing a yoga session this morning to get all the body working up. Because I've actually been taking the last few days off myself. I just spent the last 5-6 weeks doing my first training block for the Hyrox, because I'm doing Hyrox solo in April. So I started training just before the new year. So it was that Christmas period into the end of the year. So I've done I started training before the end of the year. And so that the last 5-6 weeks, I've been doing some really good. So we're talking like 40 to 60 kilometers of running every week, strength training sessions, Hyrox sessions. And so the last 2 days, this is going to be my third day of just relaxing and letting the body reset, getting some good sleep, hopefully. And then getting some yoga in, just stretching, because then I have a good solid training block starts to kick back in again, because I have literally just under 2 months left now of training. So just balancing it out for my Hyrox training, because I'm very big into obviously fitness and training and stuff like that. Because that actually fulfills me. The success of the success of the money that I make from the markets is one thing, but the fulfillment is another thing. No matter how much money I make from the markets, and I've made a lot of money, the fulfillment side is definitely something else. Thinking about getting long. Oh, what do you think of Hon? Let's go check out Hon. Haven't looked at Hon for a while. Oh, actually, no, that's not true. If I go to my TC2000 platform, I'll look at two platforms. This is the trading view, and then I'll go to my TC2000 platform. I got this actually on my watch list. I was looking at Hon yesterday. I've got trend lines drawn up on this one here. So I have a watch list here. Hon. Yeah. So I think Hon now is breaking out, and what's been happening here is, firstly, I wouldn't be buying here. Very, 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 very wrong time to be buying here right now. Why? How do markets work? Look at the chart. Does the market ever just go straight up? No, right? We get drops. It's one of those interesting things, like I think a lot of people, the FOMO kicks in, and the common sense of what we just look at these markets then goes out the window. So looking at this level here, this breakout here, it looks like it could be the start of a nice good trend for a while. The reason why I say that is that we really haven't done much for all this time here. Just trying to get a good view of it. Oh. Yeah, so this little breakout after all this time could be the start of a nice good trend in place. Higher lows, higher highs, stuff like that. Now I have already drawn these in place here. So what I'm looking for myself is does it look like a false breakout? No. Since the weekly MA is flat. Let's go check out the weekly. No. I use the 20. I'm not sure what weekly moving average you're using there, Sim. So, but this is pretty much flat. Yes, where it's just going sideways, the weekly MA, but that doesn't mean it's a false breakout. False breakouts typically happen when the moving average has been strong first. So we've had a strong moving average coming up, but then the moving average flattens out. That's when you get the false breakouts. So there's two things to false breakout sim I want to teach you here, okay? If you're using the moving average, which I like your school of thought there, I'll show you an example of what we need to look for, okay? So firstly, what we need for a false breakout to happen, we need what's called a slowing of the moving average, not flat. Flat is what the moving average has been doing on HON right now. It's just flat. That just means there's been no trend for all this time. And it's been like that for years. This breakout here, to me, is the start of a new trend. Now, how I qualify what a false breakout is two things that happens at false breakouts. Utilizing, the first thing is what you're talking about there with the moving average. Typically what you'll see the moving average will go like that. This is representing the moving average here. It'll go up like that. And let me see if I can just make that thicker now. And then what will happen, the moving average, it'll be strong for a while, but then the moving average will start to do basically something like this here. It'll start to flatten out like that. Now, when the moving average does that there, and the market starts to break out, that's typically when you get false breakouts. Now, let me show you, I'll show you an actual real example so you can actually see it on the chart here. Because I actually traded this one, and this is where I actually learned this technique here, Sim, of how do I see where a false breakout is and so on and so forth. So the first thing here is if I go back here and open up my charts, you'll notice here, this is the Russell here. But why was, and let me just, I'll delete you for a minute. As you can see here, right? Look at this here. This here was a complete and utter false breakout. It broke out and it failed. Now, why was that? Two simple things I'm going to share with you here. Firstly, the moving average had been going up for quite some time. So it had been what's called strong moving average. And then look what happened. As the market went sideways, the moving average stopped, and then the moving average then flattened out through there. It's after it goes strong, then flat, not just it's been flat for years. Because that's like here, right? That's like that bit through there. That's called flat trend, right? That's just flattening of there. And then you start to see it. Then you start to see a new trend. So if it's been flat for many years, then that's just basically the market saying that there's no trend in place at all. It's just not trending at all. That's what I mean there. But it had been going up, and then you get this pattern here, and then you get the breakout. If the moving average is doing that, where one, you had a strong first, and then two, then it starts to flatten out, that's when you get false breakouts. But the second part of that is what the price action does. Because a false breakout will do exactly, and the reason why I love talking about this, because this is when I really learned the art of how do I spot a false breakout. So the false breakout comes from firstly because the moving average is like a momentum indicator. If the momentum has been strong all through here, strong, and then it flattens out, it went from strong, this is now slowing down. So it's like, oh, and then you get the breakout. But then that's the first warning sign for me to say, don't get involved with this. Now, the next thing I see that happens with false breakouts is exactly what the price does. The price will break above the resistance level, as you can see here. And let me see if I can bring this down here a bit more. So you can see that what happens is the price will break above the resistance level, but it will just break above it. It won't break and then continue to run. It'll break above it for a little bit. It'll pause and then it'll reverse really quickly. See what happened here? It actually broke out, but then it broke out above this resistance level here. It only went up for 1 week and then completely reversed. So those two things there tell me that now the moving average would stop me from getting into it first, because that's telling me we're likely to get a false breakout. But to see that that's likely to happen, we will get a move up, but it won't break out and then continue up. It'll go up and then it will stop straight away and then completely reverse back down again. And typically what happens is you get a breaking back below. So that breakout candle, it'll completely retrace it really quickly within a matter of weeks. You won't get the market just continuing up and then continuing up like that there. It just doesn't happen. A false breakout means it breaks out and then it pauses and then drops. That's a false breakout move. So when we go now look at HON as the example, what you're saying there, Sim, if we go look at HON, firstly, HON doesn't actually have that pattern. It doesn't have the strong pattern leading into the sideways period. It is just flat. That's okay. As I said before, like when this happens for many years, this just means that there was really no trend in place. There was no one really in control. It wasn't trending up. It wasn't trending down. It's just overall volatile sideways. But then secondly, if it's going to be a false breakout, this breakout bar right here, as it broke out there, it would have stopped right there and then completely reversed and then gone down. But look what happened to the price. It just kept going and going and going. This shows you that it's a true breakout. Now, this breakout here, typically after being in no man's land on a particular stock or any market for many years, and it's just been volatile, sideways, not going anywhere, this breakout here typically represents the start of a new trend in place. And then typically then what you start to get is you'll start to get the actual trending in place start to form. That'll be the long-term trend line coming up through there. That'll be that major resistance level coming through there somewhere. So then typically what will happen is you'll start to get like, say, for example, this is the 20 moving average. You can start to get the moving average coming up like that. Then you'll start to get like sideways to pullback periods. So it might look something, I'm not saying it's going to happen now, but over the next, you'll probably get like a couple of weeks to a couple of months of a bit of a pullback here, right? And then we get going again as well too. So this to me is what's called the start of a nice trending, because when we've done nothing for years and then it starts to break out, to me this is the start of a new trend. But the trend, we do get these what's called pullbacks, and that's what a trend is place, right? So this is the start of a new trend. It's had its leg up. We get a pullback, higher low, and higher low. So they're the two main things that I see on a pullback. Where would I enter? Well, I would wait for. I know this sounds, Peter. If I'm looking for a trading setup to actually trade it as not a buy and hold, but then I'd wait for my trading pattern, my trading setup. I'd wait for, typically, simply put, for me, I need to, if it's on the daily charts, this big move up, I wouldn't be entering now. That's the worst thing to do. But I would wait for my trading setup. That's for me to enter the market away from my trading setup. Which means I would typically wait for a nice good pullback, nice good sideways phase to the moving average, and then I'll start to look for an entry signal after that. I would not want to be entering now. It's the worst thing to do, enter right now. Oh, geez. So that's all it is. When we've had the thing is, when we've had no trend, or it's just been sideways for many years, that's called no trend. It's not trending at all, just sideways. But then when we start to get a strong breakout like here, that typically tells you we're starting a new trend. And just remember what a trend is, place, right? The market will go up for a couple of weeks to a month, and then it'll have a bit of a pullback to create the high low, and then it'll get going again. And after a couple of months of doing that, then it'll have another pullback, and the pullback might last a month or two as it slowly pulls back, and then it creates another higher low, and then we get going again. Think about that in the context of what an actual trend is. So you're not tied to, this here is not a trend. This is what's called a first leg up in a bull market. Bull market to higher lows. The market will come down soon to create the high low, and then it'll get going again. Like XOM. Yes. Exactly. Exactly like XOM. Oh my. Oh. Hey Simon, I'm not sure how long you've been watching me for, but um, you would know even last year, the last few months of last year, I was talking about XOM and XLE. They were the two main markets I was really trying to hit hard. Well, not hit hard, but like I was saying that these are the markets that's going to likely make the next move. And look at them go. I saw it coming. Now I didn't know this. Now this is the first leg up in the bull market. So you're exactly right here, Simon. I would not want to be buying here. That's the worst thing to do. Why would you be buying something after it's gone up for a month when you know you're going to get a pullback soon? Like you just know it's going to come, right? And look how far away we are. This is now just gone crazy. XOM is just man, that's nice. But again, for those who were following me last year, those last couple of months of last year, I was really started to bring up the energy sector because I'm like, the energy sector, well, for me, it was XLE and XOM, those two markets. As I saw, guys, these are the markets that's likely to make the next move. Forget gold and silver; they're done. Let's look for the new bull market. Well, David Hunter said he is not bullish on oil. Peter, mate, I didn't say oil. Don't think energy oil. Okay? No. Different markets, okay? I didn't say oil, did I? I said XLE, which is that market, and XOM. Okay? Keep it really simple, man. Don't think I didn't say oil. Now you might be trying to put them together like energy oil. No. What have I always said? I said XOM and XLE, right? I didn't say USO. Right? You got to really, really, really be specific about what we're talking about here. So whatever David Hunter says, it doesn't matter. Then what we do is then we go to the USO chart and then we do some analysis on that chart ourselves and that market. The energy XLE is not connected to US or the oil chart. So please don't. This is one of the really biggest things that I see people doing, the biggest mistakes, is they instantly correlate trades. They think energy, oil. No. XLE. I'm talking about XLE here. I'm talking about the energy sector. XLE, the ETF. They're not connected. If they were connected, they would look the exact same. This is the XLE chart. And this is the USO chart. So oil may break out. Now, I am expecting a breakout soon on oil there. So same there. Well, David Hunter said he's not bullish on oil. I wonder why XOM is rising. And remember, XOM is an individual stock, right? What you want to do, Peter, a big mistake you're doing right now is you said, I wonder why XOM is rising when someone on the internet said oil, he's not bullish on oil. XOM is an individual company. That's like saying, well, the Dow Jones is at all-time new highs right now, and it's been breaking up. So therefore, all of the companies in the Dow Jones should be bullish. In fact, no, look at Nike. Nike's in the Dow Jones and Nike's getting crushed. So you can't, there's no connection there, right? A lot of people think that though. A lot of people think, oh, well, the Dow Jones is going up. All stocks are going up today. Or the Dow Jones is being to the moon. No, we can't correlate trade. All right, we can't. I'll put it over there. Don't put them together. Because each and every single market is doing its own separate thing. So when I'm analyzing XOM, I'm not thinking energy sector and oil and stuff like that. No, I'm looking at XOM from an actual that chart itself. Well, if you look at XLE, it's mostly oil companies in there. Okay. But they're doing different things now. That just shows you they're not connected, right, Peter? XLE is broken out to a very strong move this last month, where oil is still stuck in a range. Actually, the actual oil chart itself, if you actually look at the oil chart, you can't put them together, right? They actually, there's no correlation there at all. Nothing here. If I actually bring up the oil chart here, this is the actual oil chart. This chart here looks nothing like XLE. So how common sense says they're not connected. They're separate markets. So us saying, well, XLE is breaking out. Why isn't gold breaking out? Look at the chart for the last 3 years. This looks nothing like XLE. So therefore, that tells you, common sense tells you, just look at the chart. They're not connected somehow. Doesn't matter what we think about oil companies and so on and so forth. We just need to don't blindly just go on someone and then start to try to put these things together. Oil, XLE, XOM. You're doing yourself a dissatisfaction there, man. We want to keep it really simple, man. Keep it really simple. Firstly, look at the truth. Forget anyone else. Forget me. Look at the truth. If something is truly correlated and they're connected, they'll look very similar to each other. Oil and XLE look nothing like each other. So therefore, that tells you the truth is there is no connection at all. What the XLE market is doing and what the oil market is doing, there's nothing out there. Because guess what? XLE is actually breaking up to an all-time new high right now. And oil's been getting crushed and still down here at ultra low levels. So that's all it is. Trade that individual. If you think XLE is going to break out, you have that view on XLE, not a correlation of XLE. And this is where like a lot of traders getting so much in trouble. I think the dollar's going to crash, so I'm going to go trade gold and so on and so forth from there. It's the worst thing to do. I've been very bullish XLE because the chart, what I saw in that particular market was bullish. That's it. And same with XOM. Let's actually go to don't just blindly talk listen to people as well too, guys. Like think for yourself, guys, right? Think for yourself. And say, like, is this thinking actually true? See, Peter, mate, I just saw your comment there. You're doing it again, man. Don't do it. Well, if oil breaks out, that's bad for TLT. Maybe. Maybe not. Like, where did you get that from? Like, maybe. Again, you're doing this correlation thing. If this happens, it's going to be bad for this company. And like, maybe, maybe not, right? Don't do that to yourself, man. Don't do that to yourself. You're just by what you've been saying to me, Peter, right now, man. You're seeing the truth of something, and you're overcomplicating something, and there's opportunities everywhere in the market here. Don't complicate it, man. Don't complicate it. And don't be doing correlation trades. They're the worst thing. I promise you, you're gonna lose all your money. Meaning, like what we're talking about here. Well, XOM, oil, something like all that sort of stuff, right? And so if that thought, Peter, was true, let's actually look at the truth here, okay? If that thought was true, if oil breaks out to the upside, that's going to be bad for TLT. Since 2022, oil has done nothing but gone down. TLT. Since 2022, TLT has done nothing but gone down. So what you're thinking is incorrect. Look at the chart. They're actually both doing the same thing. So if that were true, TLT should be going up for the last couple of years overall. Oil's been coming down, and so has TLT. And see, Peter, this is where like we blindly just think you might have heard this something on the internet, and we blindly just, oh, I heard that. That sounds good, and then we just take it on as an idea instead of us investigating. Is that true? And see, both of these things, as you can see here, right? Like the oil itself looks nothing like XLE. So there's no correlation at all. That's the truth. Not my opinion. That's the truth. If oil breaks out, it's going to be bad for TLT. No. If that were the case, oil's been going down since 2022. TLT should be rising. They're actually both been going down overall. And when you start to seek the truth of what is happening, that's when you can make much smarter decisions in the markets, because you're seeking the truth. And whoever told you that needs to be fired. And if it's your brain, tell your brain it's fired. Don't do correlation, man. I look at TLT from what TLT is doing. That's all. But what is actually happening right now is we're starting to get potentially starting to get that move in the rates. So TMF starting to rise. Mile, we're live again. Rates show big red today. If old me shall rush to click the buy button now. Yep, TLT TMF, you show higher high, but 6 times failed, higher low. Mile, mate, you are real. Stop, Mile. Okay, Mile, what you're doing right now, you are taking you're reading the chart, what's happening right now, okay, on TLT, TMF. Let's actually add TLT, and then so okay. My view on TLT is we're likely to see a rise in the bond market over the next 1 to 2 years. Think about what I'm saying here, okay? I'm not talking about short term. I have been talking short term trend to see what's happening here, right? But think about the trade that I'm in with the bond market is simply this. We're likely to see the rates come down again soon. That's what I'm seeing in the markets. So therefore, the most hated market is TLT, the bond market. So therefore, we're likely to get a rise over the next 1 to 2 years. And when that happens, I'm going to generate a profit. That's it. I'm not trying to time it. I'm not trying to wait for the perfect buying opportunity. I'm in it. I have a position in my account, and then I'm in it, and then I let it go. That's the way that this is more like a bit of a long-term trade and a bit more of a medium-term investment. I say medium-term because it's only for the next 1 to 2 years, and then I'll be out of it myself. Just give me a sec, guys. Oh. What's the time? John 3668. They are connected. It's just XLE is a leading indicator. Really? Well, it's been lagging for 5 years then, because XLE is at all-time new highs, and the oil's been down for 3 years. If that's a leading indicator, man, it's lagging for about 5 years now. Better catch up. When we seek, the whole thing about this is let's actually seek the truth of what we're thinking here so we can think the right thoughts and make good decisions. That's all. Sim, Hey, Sim, are you who I think you are? Are you one of my coaching clients? I thought so. And it just made sense when I was just reading that comment there. Yeah. I'll coach you more on a better level in the room, you know what I mean? Obviously, so I'll send you the details and stuff like that, but when you log into the room, I'll be able to help you a lot more better there through there, right? So I hope you understand now. I can't really give you much through this here. I can give you much better advice through there. Or my recommendation anyway. All I do say, Simon, on a general basis is what goes up a lot really fast is then likely to have even on a pullback, it's likely to have a good pullback from that level there, right? Because that's what a trend is. Make sense, Simon? So if you just look at from the simple concept of all markets, if a market has had a big move for a couple of months, you know what's coming soon, right? And Simon, if you go back to the workbook manual, price time, right, man? It's a very simple concept, isn't it? So I think you know where I'm going with that. Actually, you know what? Let's actually bring on this level here, and then let's see what's going on with all these markets here. Gold. S&P is just holding an all-time new highs, eh? Look at that there. Mile, you said if John knew where the price can hit, then he shall not be here. Oh, I disagree with that. One, no one knows what really is going to come down the road. We can have a fair idea. Very strong, isn't it? No more. Obviously, there's people doing the best they can, man. That's all. They're just trying to find some certainty in this crazy volatile environment. That's all. That's all. A lot of people are just trying to find a bit of certainty what's going on in these markets. And that's the thing about the market, right? There is no certainty, especially the way just everything's been going on. So that's all it is. Everything's still looking very strong. Eh? It's interesting to see what's happening here because I'm still, oh geez, I'm still long in the stock market. As some of you guys may know, I'm still long on my call options, which are doing quite nicely. On my S&P 500, which I got in back down to the bottom here. This is when, so I bought call options here, and I'm still long now. Everything's looking really strong. It's interesting to see why it's still a lot of people are still thinking tops in markets, and the market just keeps making new highs. I wouldn't want to be fighting it. Simon. Simon's actually an old one of my old coaching clients. He's not in the group today like this year, but he's one of my old coaching clients. That's why he's having a bit of a joke there. For you guys, FYI, for you guys that actually seen the live chat right now, bit of context of that there. Do your push-ups, Simon. Make sure you do your push-ups. The bottom line is this, guys, and Mile and Alex and stuff like that. The bottom line is this, right? One, no matter how good or how big how good something looks from a trade or from an investment, there is no guarantees of that actually playing out the way that we think. That's the bottom line. Doesn't matter how much study we do, how much analyze we do, the trading pattern that I trade, nothing. So rule number one for every single one of you entering the markets, doesn't matter if it's a trade or an investment, say if this is a losing position, whether it's a trading opportunity using leverage like I do, like options, or you're buying the stock, or you're using like some margin to do like a trading opportunity, or like an investment where you're going to hold it for a little bit longer than just a few months or a couple of weeks. That's I'm a swing trader, so I'm thinking in the context of that. No matter what you do, you say, if this is a losing position, am I protecting myself? So for example, as an investment, if you're just buying something for a couple of years, like for example, TMF, you wouldn't put 100% of your account in TMF. You would say, okay, I'm going to put 5% of my account in TMF. And if it does rise over the next year or two, then my account could go up a nice 5 or 10% from there. You're not going to go 50% of the TMF, right? It's just thinking smart no matter what. That's the whole thing with this. I'm just trying to neutralize the conversation in the chat box, guys. That's all. No matter who we listen to or what we do, myself, We don't know 100%. There's no 100%. So rule number one is every time I go into it, whether it's just a buying opportunity or I'm using it from a trading opportunity, I say, if this is a losing trade, and it can be, am I still protecting my account? That simply means for me, if I get into a trade, which I got into a trade just yesterday, I got into a new trade yesterday, that can be an actual losing trade. If it's a losing trade, my account might be down about 3%. Now, FYI, my account grew by 70% in January. How does that work? If I take 10% of my trading account and put it onto an option trade and I make 300%, that's a $30,000 profit from, I'm using, oh, if I have a $100,000 trading account, use an example, right? I'm trying to show you the numbers, how I get ahead long-term in the markets. This is about these numbers, right? Because it's not about being right every single time. Right, wrong, wrong. You're right. No, stop. No one's right and wrong all the time. No one knows. We can just do the best we can, right? And the best we can is what? The best we can is just, okay, I'm going to be wrong sometimes. That's the nature of the beast. And this is where you get these people in this whole you're right, I'm wrong side of thing. It's like, oh, even just, and with one particular market, it's not like that. And the way that I trade is exactly what I just said there, right? So if I take 10% of my trading account and I take it and I put it onto like a trade that I got out of just last week, or I think it was last week. Say for example, silver. I made 300% return on that, 330% return. So a 10% position with a 300% return is what? 30% growth on my account. So my next trade, so that's 30% growth on my account from a 10% position. But my average risk on that 10% is around about 30%. And so if you think about that, look at in simple numbers, if I have a $100,000 trading account and I put on $10,000 on that trade and it does what's my last two trades, silver and FTAI, both these trades are closed at a 300% return. If I'm putting 10% of my account on both of these trades, they both did 300% return. I'm using simple numbers here. If a $100,000 trading account and I put on $10,000 on this one here, and $10,000 on, say, for example, the silver trade that I did, and they both did 300% return, that's a $60,000 profit. Or actually, yeah, over $60,000 profit there. $30,000 profit on the first one, $30,000 profit on the second one. That's a 60% growth. Think about this. That's a 60% growth on a $100,000 trading account. By taking, I'm using a lower number here than I trade, but I'm trying to put in the context here of what helps me do really well. Now, that 60% growth, what was that though? That was from a 10% position. Now, the trade that I'm in right now, use the same numbers. If I have a $100,000 trading account, right, and I take the same 10,000 and then put it into the trade I'm in right now, if this is a losing trade, I might be down 20, 30%, maybe a little bit more. So out of that, say, $10,000 position again, I'm down what? $2,000 or $3,000. Once you start to get the ranges like that there, this is the truth about trading, guys. This is the real truth about trading. This is how you get ahead long-term in the markets, because no one knows. Like, again, I can do the best I can with the trading setup and my ideas and setups, and I'm going to be wrong. But you don't need to be right to be rich. You just need to trade some good setups. And as long as you can have that sort of level there, you're going to do really, really, really well in the markets there. And that's how I've done really well as a trader. Now, you need to know what to look for, right? That's where the proper training and education comes involved with it, right? Like, we need to know what to look for that's likely to give us that. And that's all it is, guys. No one definitely knows. And guess what? You're going to have many, 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 many more losing trades in your trading career. You want to trade the markets? You're going to have hundreds of more losing trades in your trading career. And you're going to have hundreds of more successful trades. That's just the nature of the beast. I'm not trying to be right. I'm looking for a good setup. I'm going to take it. Some are going to be losses. And when it's a loss, I'm going to have a small risk on my account. And when it's a profit, I'm going to have a good profit on my account. Rinse, recycle, repeat. Have a good, successful year. That's the nature of the beast, guys, right? This is the truth. This is the 10,000 foot view, so to speak, about trading the markets. And the reason why most people don't make money in the markets because they're not doing that whole risk management thing. They're like, oh my goodness, stock market's going to go up 100% in. Let's go. And then gone. And then they just don't do well because they're trying to grow their account large by putting on too much risk. And then they just end up just getting destroyed. But I'm trying to share with you guys how you guys can get ahead in the markets if you think about this. And even if you're starting with a smaller trading account, you can grow it into a much larger account. And it's not by trading a lot. Trade selective and then start to grow up from there. But first and foremost, get some training if you don't have that. My coaching program's closed, so you can't get access to mine. I'm giving away a free trading course and a free book just to help you guys out at johnsfreegift.com, but I don't have anything to offer you right now. So I'm not offering you my coaching program. I'm just trying to give you some context of things that is going to really help you out there. So if you try to have that mind frame in there, we can have a longevity in the markets, guys. That's what it's about, right? You never want to be in a situation where the trade can go wrong, and it can, no matter how good it looks. I don't give a shit of who says what on YouTube. Now, I get really excited about the markets because I get excited about this sort of stuff. But every time I'm entering the market, okay, I could be wrong here. Or maybe it's not wrong. It's just my trading system that I trade. I'm going to have a win-loss ratio. And there's going to be losses in that loss ratio. And that just might be part of those losing trades. And as long as I can keep those losses small, and when the profits do come, I can let the profit run. As long as I can have that in the scheme like that there and think about my 12-month view, that's where you guys are going to crush it. And this is the foundation of approaching any market successfully. Intraday trading and so on and so forth. And that's what it's about, guys. And I promise you, here's what's going to happen here, right? I promise you that when you start to approach your trading like that, your profits are going to go up a lot more. Why? Because you're not going to be so emotional about your positions. A lot of people are emotional about short-term movements because they've got so much money on their account in one trade. So, for example, I've been long the S&P now ever since November lows. Ever since these November lows here, actually this SPY. So I've been the SPY, which is the S&P 500. I've been long here on call options. Now, because I'm not majorly long and 100%, these short-term little drops, which are going to freak people out, short-term little drop, and now we're back at all-time new highs. These are the drops that freak people out that have got too much risk on their account. And it creates this emotional effect, and that emotion gets you to make really bad decisions by getting shaken out by the markets. And then you end up getting out for a loss or getting out at the wrong time because you're fearful, and then the market continues on for profits. I'm sure we've been there before, right? So by minimizing your risk, by bringing your risk down, you actually end up making more money, because a lot of the trades like this one here, well, this is a trade for me, you're not shaken out by these short-term little drops because that fear is not there. Like, okay, let it go. And this is the longevity for you guys, right? I promise you, this is your longevity. I'm giving you the longevity plan in these markets. I'm gonna have losing trades this year. That's it. And I'm gonna have a boatload of winning trades. As long as my losing trades I'm getting out fast for small losses or even smaller losses, and my wins are good profits, and even 20-30% of all my profits are big profits. We're talking 3, 4, 500% return because I utilize options once again. I'm going to have another successful year this year. Rinse, recycle, repeat. Rinse, recycle, repeat. Rinse, recycle, right? I don't have to be right. And there's this whole notion, right? There's this whole notion with this industry about right and wrong. And that comes down to like silver's got to go to here and all of this stuff. It's like, we've got to stop that, guys, right? This whole ego and cope thing. Doesn't matter what I say, I could be wrong. When I present something to you, like the stock market's likely to continue because I'm utilizing thing that's going to give me a high probability of it continuing. And all that simply means is it's making higher lows above my moving average on the weekly chart here. And it's above my moving average, and the moving average is still trending up. So that means we have a high probability of going up. That's it. The end. There's no like certainty and stuff. Man, I need to clip this section out of this stream here. This is a really good talk for a lot of people just to understand how do I get ahead long term in the markets and the biggest mistakes they're making. Oh well, probably not. I won't be able. Probably won't clip it, but yeah. Anyway. So I hope you guys can see, right? I'm trying to give you the 10,000 foot view of how you be around for the next 20, 30, 40 years of these markets, guys, and not just be around for 1 year and then get blown out of the markets. I'm trying to show you. The reason why I know, guys, because I've been part of the markets for 20 years. I trade really well, right? I have one of the most successful elite coaching programs on the planet, meaning the success that they get. And it's not by luck. It's because of these foundational principles I teach you throughout the year. I'm going to have losing trades. Let's try to keep it small. I'm going to have successful trades. Let's try to make them big. And try to have at least a decent win-loss ratio. And you're gonna do really well. That's the nature of the beast, right? But when we get into the trade with a big risk, hoping this is going to be the big one, that's where you end up just blowing yourself out of the markets, right? There is no big one, but longevity in the markets is just about doing that. My mentor once said to me, people would rather be right than rich. And I never understood what that meant. What he means is that people trying, I'm not going to trade this because, I think it's going to be a losing trade. They're trying to be right with the markets. If it's a nice setup, where really successful traders, they're like, okay, I'm going to take this. This could be a losing trade. I need to accept that up front. If it is, am I protected? Okay, cool. Go. Right? How many times have we how many times have we not entered a trade? We talked ourselves out of a trade that we wanted to get into, and then that thing ran on for a big profit. You're like, oh man. Right? Or how many times have we actually been in a trade, and because we have too much risk, we got out because we were scared of losing money. We actually had a loss, and then the thing as soon as you get out, then it runs on for profit. We've been there, right? That's what the market does. Oh man. Yeah, that's true. I choose my fights and how much I swing. The only way not to get destroyed by a market. Going against your view. Alex, man. I'm not sure if he's still part of the room, man, but I hope you can see what I'm saying here, right, man? Like, your longevity, man, is that simple. Your longevity in the markets is you're going to have many losing trades this year. That's just going to happen. We're not going to try to avoid it. That's just going to happen. How do we protect ourselves when that happens? That's first and foremost. Then when the successful trades do come, how do we maximize that so we can have still have a bit more of a bigger profit? That's where, in the context of what I said there, like, for example, my 2 trades that I closed out in January, they were both 300% profits on options there. So that's a 60%. That's a 600% growth. That's a 600. That's a 600% total there, right? So, but even one of those trades, think about it, a 300% profit on an option, not on the total account, but on the investment. If I take the same investment or same trade and I take another trade, but now I'm down 30%, I made 300% and now I'm down 30%. I'm still up 270%. I could have another losing trade and now I'm still up 250%, 240%. See the numbers? This is what I'm trying to always get. Now, I don't always get the 300%. Sometimes it's 280%. Sometimes it's 100%. Sometimes it's 500%, right? But this is how I'm trying to take on the year in my mind right now. And so far, it's been a really good year. So far, my actual closed trades, I'm in some trades now. I got into a new trade yesterday. So we'll see how that goes over the next couple of months. But my actual closed trades, I've had two really nice successful trades. A big growth in my account because I take small risk. So I've had a really big growth in my account this last month. And that's the way it works. I need to, you know what? I'm gonna try and timestamp this so people that come and watch the replay can actually see this here. What time is it? 1:18. Okay. Because I think if people watch this replay, this 1:18 mark, I think it's going to really help a lot of people. I think what I just said there around the risk management stuff is going to really. So I'm going to try and timestamp this so when they watch the replay, they can just see about that there, about this section here. Yeah, my good setup. 200%. Yep. Alex, people love their positions more like a footy group mentality. Yeah. And what I'm teaching you guys, once again, like my job as a coach is to help you be around for a long term, not for a short term. I don't want you to be like, if you put a large percent of your account on one trade and it makes a lot of money, there's a recipe for disaster. Because what if the next trade is a big loss? Like, you know what I'm saying? Like there's not longevity in the markets. But if we want to be running these markets long term to do really well long term, even if you're starting with a small trading account, like trust me, I know there was once a time there, guys, I was $250,000 in debt. That means I was $250,000 in debt. That means I had to make around $400,000, pay my taxes, and then pay the debt off just to get back to break even. I understand. Now that was a long time ago now. But that was my first 5 years. I've been around the markets for 20 years now. I'm trying to share with you the things that has helped me and the things that I've done wrong as well too. I've been the guy who had a $10,000 trading account and whacking on $5,000 and blowing 40% of my trading account up in one day. Actually, no, that's not true. There was one night there where I blew 50% of my trading account up one night by trading the futures market. And it wasn't even my money at the time. My father-in-law's money. Still, it looks like it's getting ready for another leg down. Alrighty, guys. Well, you guys on YouTube, I have to finish up now because I've got to head over to my elite coaching group to talk about my positions that I'm in right now and what's going on, and anything new that's coming up, and so I can actually help them on a more level and talk about my positions and stuff that I'm doing right now. So I have to leave the good old YouTubes, and thanks for joining me today, guys, and I'll see you guys next time.